I want you to talk about the banks that went under within the past few days, Silicon Valley and Signature, and the president's response to these banks failing. But first, how did these banks fail?
Yeah, so starting, some people will say there were three bank failures. That's not technically correct. So Silicon Valley Bank and Signature Bank, they failed over the weekend. Silicon Valley on Friday, Signature on Sunday. But is important to note on Wednesday, crypto focused, pretty big bank, Silvergate said that they were shutting down operations. So it was on their own volition, but they pseudo failure. So it's really three failures there. Um, and Silicon Valley Bank, which is second biggest bank, that one's definitely the most interesting out of the three. So roughly what happened is starting on Wednesday, there was a complete collapse in confidence in Silicon Valley Bank. So I believe SVB was the 16th largest bank in the country by deposits before it failed. But a lot of that was, riskier type. They tended to have a riskier type of customer. I mean, implied by the name, it was a lot of these West Coast startups, venture capital firms, and they dealt a lot in more short term interest rate sensitive assets. Um, and so roughly what happened was breakdown in confidence in the bank's leadership, and they said they were selling some securities at a loss, and then there was a massive run. They were unable to meet customer demands. But again, it wasn't like something, and I mean, not that FTX was a bank, but it wasn't something as clear as an FTX where it's like, okay, like they, you know, there's some shady stuff going on that they clearly are, not doing the right thing with customers' money. They're clearly not as financially healthy as they would want you'd want someone holding your money to be. It was kind of, just a run amongst venture capitalists and people that had their money there. And then Signature Bank, similar story. And that closed on Sunday at the same time that the Treasury Department, Federal Reserve, and FDIC announced their measures to save previously uninsured depositors at both of those two institutions.
Derek, something that you said that I wrote down that I want to discuss is that you said that this was a breakdown of confidence in leadership. Is this a management problem, or is this a larger problem, maybe a broader economic problem where other banks can see potential ramifications?
So I'll say somewhere in between. I know, that there were some Silicon Valley Bank specific things. Like I know they had, you know, in the aftermath of things, you can see, cracks in risk management, and like I believe they couldn't hold down a chair for their risk committee. There's some things that seemed pretty specific, but again, I mean, it's not at this point. I know today it was announced, the collapse is being investigated by the Department of Justice and SEC, are not announced, but the Wall Street Journal is reporting that. So we'll see if there is criminal, if there are criminal implications. But at this point, I mean, it doesn't seem to be as clearly nefarious as maybe, some other high profile collapses have been. Yeah, and in terms of trickle, kind of the trickling. I mean, we saw a massive collapse in market caps of pretty much every single bank stock. So the top 10 largest banks by market cap, they lost, I think it was about $170 billion in market value over the three trading sessions. leading up to and following SVB's official collapse. But what experts pretty much all say is that these big banks, they're going to recover, and to get borrowing a term from Great Recession, but the big banks really are too big to fail to a certain extent. I mean, it would be hard to envision a scenario, what a run would have to look like in order for them to really face the similar liquidity issues. But with regional banks, there are real concerns. We saw yesterday um, several regional banking stocks dropped as much as I think 70%. First Republic's a big one of kind of a very direct peer of Silicon Valley Bank, San Francisco based, catering to higher net worth clients. But across the country, we saw regional bank stocks tank yesterday. A lot have recovered today. But some interesting, analyst commentary came out. I know yesterday Bank of America cut their price targets for, I think it was 20 different regional banking stocks by an average of 14%. And there are a lot of concerns about, for especially the smaller banks, how they're going to handle potentially higher compliance costs, and how the federal government and financial regulators, I mean, if they are going to be, changing rules and such. So yeah, I mean, at this point, it seems like the consensus is that this isn't something where the contagion is going to spread and there's going to be some massive collapse, but there's definitely enough there that we could see another regional bank fail.